fast forward nearly 10 years now, there's no doubt that the business model has proven to work, not just for early stage tech companies, but late stage movie financing, music financing, crypto, that is digital securities being fractionalized. So I think that we're still in a long first inning of
Mhm.
this next era, but there's no question that is well underway. But I think the true potential, the size of it, is something that is to be seen in the months and years ahead.
I appreciate the clarification. I probably should have said equity crowdfunding versus crowdfunding writ large. I mean, one of my favorite bands, Archspire, is crowdfunding their next record. That's not the same thing as what we're discussing here. Okay, so fair enough. But there was a change in late 2020 that raised the cap that a company could raise in equity crowdfunding dollar amount from, I think it was, Kendrick, 1.1 million to 5. And so I'm curious now, 4 or 5 years past that point, what impact did that have on an equity crowdfunding and also on Republic's business?
It brings later stage companies, because $1 million is still a lot of money, but for a company that's already in its Series A, Series B, Series C, a $5 million as a cap is a little bit more meaningful. They can engage in bringing more customers, more community members, and
Yeah.
I'm optimistic that that cap will continue to go up, to perhaps 20 millions, and even there's been talk in DC of potentially expanding it to $100 million and beyond. So again, just the very beginning, but there's no question that currently, as is, we're working with large enterprises across a wide range of sectors and industries
Yeah.
who want to engage the public through this regulatory framework in the US.
So generally speaking, I'm in favor of the cap going up. I'm curious though, is there a ceiling that you would put on it? Is there a dollar amount that's probably too big, or is there no real limit here in your review of how high we should raise that max limit?
I am definitely a firm believer in free market to do so sensibly, but I think these arbitrary caps on 5 millions or 10 millions, I think it's a little bit artificial. I think there are
Yeah.
other ways to address, to protect investors' interests rather than this arbitrary threshold. So if it were up to me, I would not put a threshold on it, similar to, under Regulation D, or if you're going to go public, for example.
Yeah. No, I'm with you on that. I was curious if there was any technical or hidden risk that I wasn't thinking of, but I'm glad that we're aligned there. Now, equity crowdfunding, one part of the business, clearly not the entire thing. You also have Republic Capital, which I believe has something like 500, 600 million AUM. Is that a traditional venture capital vehicle that I should kind of think of as in competition with a Sequoia, or does it have a different posture on the market that I should keep in mind?
Alex, it's a great question, and allow me to define what we are today. And I think it ties everything in together. The business of Republic is building the infrastructure that can accommodate capital raising and community investing.
Mhm.
Next generation, what does it mean? It means that the regulatory framework to take in non-accredited retail, the ability to accommodate institutional as well through SPV or direct, the ability to do secondary trading, the ability to tokenize and put whether it's a small business or a certain crypto project on a revenue sharing basis on chain, right? So when we first launched, the first piece was equity crowdfunding. We added on capital, and of course, to generate revenue, we did syndication and other things. But think of it as different components that, when all in together, enable an enterprise to fractionalize, tokenize, and engage with the retail public globally with liquidity. That's
Yeah.
obviously a very ambitious plan, and it took us 10 years to get to where we are today, which is the first year that we have a completely functional infrastructure for RWA, real world asset tokenization, for true retail participation.